Good morning, everyone, and a very warm welcome to you all. Today, I'm very pleased to have my colleague Christine with me. And as some of you may know, Christine used to head up the healthcare team before moving across to head up VAT here at Duncan and Topless. So the perfect person to be delivering this morning's webinar with a wealth of knowledge. We're doing short webinars, so this is a whistle-stop tour. It's going to be a quick refresher and some key things to watch out for. But if there are certain aspects you would like to see us deliver as a deeper dive in the future webinars, then please do let us know by adding this into the feedback form that you'll get after the webinar. If you have any questions, please do pop them in the Q&A section and we can cover these at the end of the presentation. So without further ado, I'll pass you over to Christine. Thank you, Christine.
Thank you, Kay. So yes, as Kay said, this isn't going to be anything in-depth and technical, which is probably a relief for most of you, or maybe all of you. So I'm going to start with some just basic principles, and then drill down a bit more into matters relating to VAT for dispensing practices. This is very much focused on dispensing practices because they tend to be the ones that are VAT registered, but it is possible that other GP practices may also be required to VAT register. So just to go right back to the beginning with VAT, the concept of supply is at the heart of VAT. So, and a supply, broadly speaking, is anything that you're doing, a service you're delivering, or a supply that you're making that's done for consideration. That doesn't necessarily need to be in the terms of money. It could be a barter type arrangement, but generally it will be money consideration. And it is a tax on the actual value of the supply rather than turnover or profit, which is what applies to other taxes. So it does need to be considered in real time as transactions are occurring. And it needs to be considered in relation to every transaction the business undertakes. We just drill down into what I've called on here the VAT tree. So you start with your transaction, and then the first thing you need to ask yourself is whether that is outside the scope of VAT or whether it's within the scope of VAT. Now, the majority of what GP practices do will be within the scope, but we will touch on one or two outside the scope items. If it is within the scope, then it's a business activity that you're carrying on, and it could be a business activity that accesses one of the relieving provisions for exemption from VAT, or it could not, in which case it may then be taxable. If it is taxable, there are three rates. Again, there are further relieving provisions, and the main one that dispensing practice is going to be accessing is the taxable zero rate in relation to their dispensing activity. There's also a reduced rate, and then anything that's not covered by a relieving provision that's within the scope of VAT will just go to the default standard rate. Businesses, as well as charging VAT on the supplies they make, they will also incur VAT on the supplies they receive. And VAT can be reclaimed for practices that are VAT registered. VAT can only be reclaimed if it's attributable to a taxable supply, that VAT has been correctly charged. The recovery is not blocked in any way. There are various bits and pieces, most of which don't apply to GP practices because it tends to be around cars and entertaining, which most practices don't have. And one thing that is coming up a bit more on the radar, it's always been the case that VAT incurred can't be part of a fraudulent transaction, one that you should have been aware of. And that refers to supply chain fraud, and businesses can unwittingly become involved in this. So where a supplier is making a supply to you, and they're then basically disappearing without paying that VAT over that you've paid to them. So it is important, and I'm saying this now to all our businesses, that you undertake supplier checks. So any supplier that you deal with, you need to make sure, well, firstly, that they are VAT registered, and there is a simple way of doing that. There is a UK VAT number checker on HMRC's website, but also to do the necessary due diligence in terms of credit checks, etc. Because, you know, then you can prove to HMRC, well, okay, this was a supply chain fraud, but I did everything I could to check out the credentials of this supplier. It's often worth nipping on Companies House and just having a look at the company and whether they've filed accounts as well. So there's a few checks you can take as a recipient of supplies to make sure that you're not caught up in any supply chain fraud, or do the best you can to make sure that that's the case. It may sound far-fetched. It's not prevalent, particularly in the GP world, but it is prevalent in the world of construction. So if you are undertaking construction services, having a new surgery built, etc., just make sure you're dealing with people you know are reputable, creditworthy, etc. Just because a transaction might not have any VAT charged on it, which it wouldn't do if it was exempt, neither would it do if it was zero rated or outside the scope, in fact. But it is important that you understand the reason that no VAT is being charged, because traders making both exempt and taxable supplies are going to be subject to what are known as partial exemption rules. You're in that very special club, which gives everybody a real headache. And it means in certain scenarios you can recover VAT, but in other scenarios you can't. So it is quite important to understand the difference between an exempt supply and a zero rated supply. Just a little bit on surgery premises, just before we move on in detail to looking at more of the income streams. So there may be situations, yes, where you're incurring VAT and recovering VAT on a day-to-day basis, but there may occasionally be bigger projects that you're undertaking that could fall within something called the capital goods scheme. So these are projects that currently cost over £250,000 and will relate to an acquisition of surgery premises or an extension to, or a major refurbishment of the surgery. At the moment, that sits at £250,000, that limit. It is going up to £600,000, so probably most surgeries, definitely in this locality of the East Midlands, will not be getting up to that sort of level of cost for an extension or a refurbishment, but some do go much higher than that. So you do need to be aware that where you're incurring VAT, you may just be able to recover it now on day one because it relates to taxable supplies, but if the use of that building changes over a period of time, you've got to monitor that over a 10-year period. So just something to be aware of. Generally, we would advise our practices, if they're undertaking any capital projects, to get in touch and to take some advice, but for several reasons, which we'll look at a bit later. So I mentioned the word partial exemption. I'm sure, as this is a refresher, all of you are familiar with it. And it's important that you slot your expenditure into the appropriate box. So input tax on goods or services for the purposes of making taxable supplies, making exempt supplies, or making both, in the fact that you can't really attribute to one or the other. And those are the ones where you're going to need to do the calculations and some sort of apportionment between what you can recover and what you can't recover. These are, so exempt input tax is subject to de minimis limits, which we will come on to at the end of the webinar, just to remind you what those are. So I think that covers the basic principles. So if we just move on quickly to what is particularly relevant for GP practices, and we're going to do this by looking at the various income streams that GP practices receive. And sort of really at the heart of what you do in general medical practice are delivery of medical services, and they're provided by registered health professionals, the GPs, and within those organisations, nurses and other potentially registered health professionals. So GPs are on the GMC register. In the UK, you do have to be on a statutory medical register to access the exemption. The services must be supplied within the profession in which you're registered to practice, so it's not anything a GP does. It is just those medical services which you're licensed to do. And the primary purpose of those services, and I know this is something we talk about a lot when we talk about VAT with GP practices, it's whether that service, the main purpose of it, or the sole purpose of it, is the protection, maintenance, or restoration of the health of the person concerned. So as the majority of what you're doing is delivering healthcare to your patient populations, then that is very much going to be the core of what you're doing. So most of what you do is going to sit quite squarely within the exemption. If we drill down into the actual core contract income and the amounts that are exempt, so you receive your main payments under most of you are within the general medical services contracts, so within your global sum. There are some amounts that you can carve out where you are a dispensing practice. So you can apportion an element of that global sum to dispensary staff. For those of you that have been in general practice quite some time, you'll remember when the contract came in back in 2006. Prior to that, you used to actually get a reimbursement for staff costs. That was all subsumed within that global sum. So you can carve a percentage out. That percentage was 70% going back then. I'm sure it doesn't bear any resemblance to that now, but nonetheless, HMRC seem happy to accept that it is 70% of that staff cost, well, eligible staff cost. So you can look at your dispensary staff cost and strip out 70% of that as part of the zero-rated dispensing services. Within the exempt income, you will have your enhanced service payments, general reimbursements for practice costs. Again, for general reimbursements on cost rent and rent, you can apportion out an amount for the dispensary area relating to that dispensary, and then that can be moved into the taxable rather than the exempt column. Make sure you gross your statements up. We do provide templates to all our practices. Most of ours use the Xero software. And as long as you're using the templates, you need to be grossing up for deductions for superannuation, levies, etc. So then moving on to the income you receive for drugs, there will be an element within those drug statements that you personally administer. The majority of this tends to be the flu vaccinations, which will be exempt, so you won't be able to push that into the Xero rated, but the majority of what is on those statements every month, apart from when you get to flu vac season, will be Xero rated. And as I said earlier, Xero rated is different from exempt because it is taxable, which allows you then to recover VAT on the standard rated VAT that you're paying on those drugs. HMRC will expect an apportionment, and I've been on VAT visits where they have asked for those calculations. There are several acceptable methods, but generally the cost-based calculation is most VAT efficient. You can use the VAT allowance on the PPA statement, but generally you would be recovering less VAT if you were doing it that way. And don't forget about all the other bits and pieces that GP practices have going through their books. So there will be various different certificates that you do that are connected with the patient's health, those sort of welfare type assessments. There may also be bits and pieces that might be exempt for other reasons, so land and property, so where you've got room hire, if it is just a pure room hire, insurance reports, etc. There are also lots of certificates that you do that are standard rated, so aren't covered by any reliefs. And so you'd be looking at sort of your passport counter signature, get a lot of shotgun licence applications in these rural areas. And so I know you do a few of them, HGV licence, etc. We do have one or two practices that do get involved with medical research, clinical trials. They can be standard rated, or in certain scenarios, they can be exempt. So do please reach out for advice if you're getting involved in clinical trials or medical research contracts. And there will be some outside the scope income, so completely outside the scope of VAT. Anything that's outside the scope of VAT doesn't hit the VAT return at all. So looking at any statutory fees that you receive, any compensation payments, bank interest tends to be incidental. Employment income, some GPs have outside appointments which go through the practice as income. So they would also be outside the scope. But more and more we're seeing practices getting involved in special projects with the ICB or NHS England, running pilot schemes. The VAT treatment on those will depend on what services you're actually delivering. So we would always recommend that before you get the contract all signed, sealed and delivered, that you just run that past us, and we can just give a bit of advice as to whether that is going to be exempt, just because the funding comes from NHS England, and it may well be that they put this is the total price and we won't pay any VAT on top. That doesn't necessarily mean it's not a VATable service that you're delivering. So please get in touch if you've got any of that type of income. And I know a few of you have done that. Educational services, you do provide as GP practices. You often have trainees, you sometimes go out and do lectures as part of your medical training. As most GP practices are partnerships, then a lot of that will be exempt under the exemption that applies to education. But it's not a broad brush approach. It is very specific. If you are running your practice or any of your organisations through a limited company, then it will not automatically be exempt. Mainly what you're relying on as a partnership is the private tuition exemption. So it's the individual GPs delivering those education services. You don't get that if you're a limited company. You also, I know, train quite a lot of students. And again, it's important to look at the terms of those agreements with the funding body, the type of training you're delivering. So it can be specific, the VAT can be specific to the actual training contract you're delivering. Let's say the majority will be exempt, but it's always worth just checking it out beforehand to make sure you're getting it right. Provision of staff, this has come up a lot in recent years with the introduction of primary care networks. So any business of supplying persons in the employment of the person carrying on a business to act or under the control of other persons in any capacity, that is a taxable supply of staff. So what needs to be considered when you are making supplies of your members of your team to another practice, which happens quite regularly within primary care networks, then you've got to consider whether you're actually supplying a healthcare service or whether you're supplying staff, and that boils down to who is has the control of those persons that are being supplied. Often with primary care networks, you may be supplying administrative support, or it may be a combination of several services. So then you'd be looking at potentially what is the predominant supply, and that can get quite tricky. So it's always worth just getting the position checked out, think about who's employing the staff, and it could be across your primary care network that they're under joint contracts of employment, which is a solution. So that is one area that we do look at when we're discussing this with practices, but where they're employed by one entity. Sometimes people are seconded temporarily. And also you need to consider what role they are performing, because there are some concessions for nurses as well. We all know nurses are very special people. I'm not quite sure why they're special for VAT, but yeah, you do need to drill down quite considerably with provision of staff just to check what services you may actually be providing in those scenarios. If you are a lead practice, and most dispensing practices are not chosen to be the lead practice because they're VAT registered, but sometimes that can't be avoided if all the practices in the network are dispensing practices. You will be holding money on behalf of other practices under the PCN-DES. That is outside the scope of VAT. It is not your money. So you're holding it on trust for the network. So you don't need to, that doesn't need to hit your VAT return at all. So yeah, then going back to the little pots that we said earlier, if you've got all that right on your streams of income, you've deciphered what is your exempt income outside the scope, taxable income, and then within taxable, what sort of taxable that is. For where you attribute your costs, it doesn't matter what sort of taxable, as long as it's taxable. So that would go in that first part, taxable. Your exempt bits would go in the second pot, and then all the other bits and pieces, mainly general overheads, are going to go in the final pots. So yeah, general guide, your dispensing related costs are going to be fully taxable. Your personally administered drugs and vaccines are going to be exempt. Surgery requisites, medical consumables, we've tended to put those in residual where we can. Some things may be very much exempt because they are very much associated with the medical side, but couch rolls, for example, if you're doing other types of reports which are taxable, you can pop those into your residual pot. The outside the scope costs of stuff that doesn't hit the VAT return, wages, rates, drawings, superann, GP's personal expenses, they don't go on at all. And once you've got all that sorted, you then plug it into this calculation to work out how much VAT you can reclaim. I'm not going to go into this because that's another course that we do that goes into a very detailed training session for dispensing practices. You do have a VAT year, which for most practices will run to March. And not only do you need to consider that partial exemption at the end of each month or quarter, but you need to carry out possibly an adjustment at the end of the year. And if you're close to the de minimis limits, so just going back on there, we've got the de minimis limits on there of less than £625 per month of input tax relating to exempt supplies, and 50% of less than 50% of the total input tax. Most practices that bottom line will be yes, but most practices that top line may be yes in some months or quarters, but generally will be no. So you will have to pass on both tests. So you end up in the annual column there with a yes and a yes. And if you don't end up with a yes and a yes, you're not de minimis. So just a few planning tips to just recap. What we're trying to do is minimise the VAT attributable to exempt supplies and maximise taxable input VAT. So a lot of what I've been through there is making sure that you're getting the coding right. Coding is absolutely key. Your VAT coding on your software. If you do that, then the calculation will just drop out and you know you're going to be maximising your position. Additional contract income for special projects, always get the VAT treatment checked out. Supplies to and from PCNs, check the treatment as it might not always be exempt, especially where the supply of staff is concerned. And note that different rules may apply to companies than partnerships or sole traders, so always seek advice if you're unsure. And I think that brings me to the half hour. Sorry, that's been a little bit whistle stop, but hopefully it's just you can pull out from that a few key things that might apply to your practice. So I'll hand back to Kay for any questions.
We've got no questions in the chat at the minute. I don't know if anybody has got any questions they want to pop in there. Thank you very much, Christine. That was really helpful. As I said at the beginning, if anybody does want a deeper dive into any of those areas, please do let us know on the feedback forms so that we can tailor future webinars and put anything on in the future that you might find helpful. It's a massive subject, isn't it, Christine? So it's
it is, yeah. I did feel it was a bit whistle stop, but it is a refresher and a reminder that if any of you out there are newbies to VAT and GP practices, then please give us a shout. We can always put on a more detailed training session.
Still no questions.
No.
So watch this space for future webinars. We haven't got anything else booked in at the moment, but we are just looking at what to put on over the next few months. So as I say, if you can fill in the feedback form and just pop on the bottom there anything that you would like us to see delivering, as well as if you want any deeper dive into any areas of VAT that we've touched on this morning, it would be really helpful for us to know what we can put on that's going to sit well and help our practices. Thank you very much for joining us this morning, and I hope you enjoy the rest of your day. Thank you very much.
Thank you.
Thanks, Christine.